What's going on, you guys? My name is Zach Hartley, and in this video I am going to show you how to buy an option, and we are going to place our order. So the company I'm looking at today is Air Canada on the Toronto Stock Exchange. I'm using stockcharts.com, and this is what the stock looks like over the last 6 months. So super steady growth. It was a $40, $50 stock pre-COVID. COVID hit. It dropped all the way down to $10. So again, this is an airline stock. It was one of the absolute hardest hit companies from COVID. They were absolutely decimated. They fell by 80-90% here. They've laid off most of their staff, and it's been one of the most hard hit industries from COVID. Now, since then, it climbed back from that low of below $10. It climbed above $20. One, two, it looks like 3, 4, 5, 6 different trading days where it reached above $20. So I really like that. And then since then, it's come all the way back down. It's tested that $12, $13 level, and now it's around $16, and it's been trading at this $16, $17 range for about 6 days. So that's what I'm looking at in the chart. And the reason that I want to buy an option in Air Canada is because I'm going to buy this option for a couple months out from now, when I think that air travel will start to come back, will start to resume, and Air Canada has a large fleet, has a ton of great staff, has a lot of good things going for it, where if people start to travel again, Air Canada is going to be very well positioned to take advantage of that and be one of the first companies to recover, and hopefully within 1, 2, 3 years get back to where they were before. And so I'm going to buy options for a couple months out. I do know that this industry is extremely volatile right now, so I'm going to buy it a couple months out from now, hoping that COVID starts to ease, people start to get a little bit more confident going traveling again, and hopefully within a couple of months people are starting to book plane rides again and business is back to normal. So we will see. This is my bet. If things don't go well, I'm only buying options, so I don't have a ton of risk. But if things do go well, there's a ton of upside here, especially since the options right now are super cheap. I'm going to buy in. Price right now is $16, and the price has already traded above $20 and even $22.5 just in the last couple of weeks here. So I'm going to buy a option with a strike price around there. So I'm going to go right into my bank here. I'm going to just kind of start from scratch so you can see how I'm doing everything. So we're going to go Air Canada on the normal Toronto Stock Exchange. You can see it listed there. Now, if you were going to buy the stock, you would use the same page. You just click buy and sell. But if you're going to buy options, there's one option right here, and you click on this. And now at the top, you can see the year on the left-hand side here, so you can buy options all the way out. We're going to buy them in 2020. The month right now is May. It's the 28th right now, and it's 2:40 p.m. I'm going to buy my options for October. That is when I want to get in. And now your options will almost always expire on the second or third Friday of the month. I forget which one it is right now, but they'll always expire basically about 2/3 the way into the month. So I am going to buy an option for expiration in October. Now what that means is I am buying the right to purchase the share at a certain price in October. If we go down, we can see the prices that are available. So the strike price in the middle here, the stock is currently trading at around $16. And if we look at this, I can buy a option with the expiration in October with a strike price of $18, and that would cost me $3.30. So that means that my break-even point would be $21.30 if I bought this one right here. Here's another one, $17 strike price. The cost is $3.70. So my break even on this, even if we open it up, you can see the break even is $20.55. So it's the price of the stock, the strike price, plus the price of that option. And this is given at the most recent ask, not the most recent price. So that's where you get this break-even price right here. But basically, you start making money as soon as the price of the stock goes past your strike price plus your option price. So when I'm looking at this right now, I say, okay, I can break even at $20.55. I can also break even at $21.15. Pretty close, pretty close. The next one jumps up to $4.25. Not a huge difference there. So I'm gonna go with this one right here. I really like this one. My strike price on this one here is $17. and the current ask right now is $3.55. So if I buy this at market price right now, my break even will be $20.55. So if the price of the stock is higher than that, by the time we hit October, that means that I will have made money. And I really like those odds right now, because in the previous month where COVID was at its absolute worst, Air Canada has already traded above this exact point, that 20.55. I believe, let's go back to it real quick here. It looks like it got all the way up to 22.50 here at the end of May. So I really like these odds. I think I've got a good chance here at making some money. Even if we have just a slower than predicted recovery in the COVID, I think we're gonna do fairly well on this. So I'm gonna go in and I'm going to buy. Now remember, when you buy options, you're buying them in contracts of 100 units. So when I'm buying at a ask size of $3.55, that means one option costs me $3.55. I buy it in a contract of 100 units. That means I'm spending $355 at an absolute minimum to get into an option on this stock. So I'm gonna place a $5,000 position on this. So when I go 5,000 divided by 355, that means I'm gonna buy 14 contracts. So when we go into here, we're buying this on the Canadian exchange. I'm using my margin account. We're going to buy to open. We're gonna buy 14 contracts and we're gonna call them. It is Air Canada. It is on the Canadian market with an expiry of October 16th, 2020 at a strike price of $17. We're gonna buy it at the market price because we're a couple months out. I'm not day trading here. I'm not super specific. I'm buying this a couple months out with a little bit of room to wiggle. So I'm gonna get in at the market price and not a limit price, because I just wanna get in and I wanna hold that trade. I'm gonna hit continue and I'm gonna confirm this trade. And then we are gonna lock in that options trade. Boom, order submitted. And so now right here, here's the breakdown. So here's my account. I'm gonna buy the call to open. I'm gonna buy 14 contracts. It's a call, which means I'm going long on the stock. If I was going short and I thought the price was gonna go down, I would buy a put. I'm buying Air Canada. The description is October 16th, 2020. That means that that's when it is going to expire. The strike price is $17 and it is a call option. So on October 16th, if the price is higher than $17 plus $3.55 or whatever this trade executes at, probably around $20.50, then I will have made money. So on the Canadian market, I'm buying at the market price. Here's the rest of it. This trade is going to cost me exactly $5,000, just like I predicted. And it is submitted, and either today or tomorrow we will have that trade executed, and that is how you buy an option and an Air Canada. So when I'm looking at this stock, all we have to do is get back up. I'm gonna annotate this right now just so I can see my green line. So we're gonna go horizontal line, $20.50, so right about there. I'm gonna color that green, and if the stock price gets above that line, that means that we are making money using options on Air Canada. And I have a ton of confidence in this because it's May, we got June, July, August, September, and half of October for this price just to go up by about $5, where it was like less than a month ago when COVID was even worse. So I've got a ton of confidence in this. If you're interested in making the exact same trade, definitely check out the options at your bank or your broker. If you have any questions, send me an email. I look forward to hearing from you. And if you get anything from this video, please remember to show some love. Thank you.